I'm Priscilla Barrera with the Investing News Network, and here with me today is Andy Schectman, president of Miles Franklin. Andy, thank you so much for joining us again.
Thanks, Priscilla. It's great to be here again. Nice to see you again this year.
So we're here at Sprott. What is your main takeaway so far from the conference?
There's certainly a buzz in the air, a charge, unlike any I've seen in several years. You can tell that the market is turning up in a direction that so many of us have been hoping for quite some time.
Right. So we spoke last year here in Vancouver as well, and we talked about buying physical precious metals. What has changed since last year? Has anything surprised you?
What has surprised me is the number of orders that we are doing or seeing in the industry has really shrunk, but the size of the orders has increased exponentially. We are on pace for our biggest year ever, maybe by a long shot in terms of dollar amount. The number of orders that we are doing, however, is towards the lower end of the spectrum. I guess I would characterize that by the public is still out of this market. The people who see it for what it is are jumping in with both feet. We're seeing accredited and institutional size investors making substantially large purchases. But at this point, the mainstream is certainly not involved in it, characterized by what I would say are the lowest bid prices I've seen in the industry in 30 years, and some of the best availability and low prices on other items that I've ever seen in my entire career.
All right. And in the past few weeks, we've seen the gold price increase. Would you say this is a good time to also increase your investments in physical precious metals? And talk to us about interest from investors right now.
Yeah, absolutely. Well, I think one of the reasons you're seeing the gold price move up so handsomely is something called the Basel III Accord. The Basel III Accord, Basel is where the Bank of International Settlements is located in Basel, Switzerland. As of March 29th this year, just a few months ago, they passed a law or they changed the designation of gold from a Tier 3 asset to a Tier 1 asset. And what that basically means is that a Tier 3 asset, the banks can only declare 50% of the value on their books, substantially curtailing their ability to transact international trade. As a Tier 1 asset, however, the price of gold is on par with government treasuries, or the value of gold is on par with U.S. treasuries and cash. It creates a tremendous incentive to de-dollarize, and as a result, throughout 2018 was the largest acquisition by central banks in the last 50 plus years. First quarter 2019 is 75% over quarter one 2018. What I'm getting at, and what I just said earlier about the much larger sales but the smaller number of sales, to me, big money is trading ahead of the curve. You have the most sophisticated, well-funded, well-informed, influential traders on the globe, the central and commercial banks, really stuffing their coffers. Right now, JP Morgan has amassed 25 million ounces of gold and 850 million ounces of silver in their house account. Here again, you have sophisticated investors loading up, pushing up the price ahead of the crowd. I would say to the people in this room, the people at this show, are more in tune than the man and woman on the street. So for the people on the street who are listening to this, I would simply say this. You follow what the big money is doing, and the big money is most certainly de-dollarizing and putting their money into precious metals. We are nowhere near too late. This is the very beginning. I would say it's the bottom of the first inning on a 9-inning ball game. So yeah, definitely, it's lots of room left to go on the upside.
All right, and aside from gold, what other precious metals are you excited about this year? I know that last year you mentioned platinum. Is that still the case?
Well, platinum and silver to me are two of the most undervalued commodities on the planet. In fact, platinum is every bit as undervalued, if not more, today than when it was last year. But when I take a look at silver and the ratio of silver to gold, which is somewhere in the neighborhood of 90 to 1, that is as unusual as 4 feet of snow in the Florida Keys in August. It's as undervalued when you take into account the relative value of gold as it has ever been in centuries. And I'm not stumbling over words when I say centuries. On a relative value basis, silver is the buying opportunity of a generation. I mean that in my heart, 100%.
All right. And for the investors that are watching us today that might be thinking about jumping into buying bullion, what is one misconception that you usually see from investors that are buying physical precious metals? What is one mistake they should try avoid making?
Well, I think the biggest mistake you will see people make is immediately looking for the cheapest company on the internet. In the last 4 years, 3 of the biggest online companies have gone bankrupt and over $200 million has been stolen. Northwest Territorial Mint, Bullion Direct, and before that, Tulving. 3 of the biggest, most well-known, but yet cheapest online companies. What matters is working with a company with good reputation. Another misconception is that it's difficult. Buying precious metals is as easy as anything you have ever done. It's easier than opening up a financial account. It's easier than opening up an insurance account or a brokerage or a bank, anything. It's very easy, and you just want to work with a company that has a really good reputation, that hasn't had any complaints filed against them either with the Better Business Bureau or negative remarks on the internet. If that's all people did, focus less on the cheapest price but more on reputation, you know, the bottom line, Priscilla, is you never realize how important reputation is until you are on the wrong end of the stick. And once you do, you'll realize, hey, it's better to work with someone who's established, has a good reputation, and you know you're going to get not only what you paid for, but a good quality product that you're hoping to get when you make the purchase.
All right, Andy, my last question for you today. What are some of the factors investors should be watching for the rest of 2019 that could impact their investments?
Well, obviously the price, that's first and foremost, but I think they should also be watching what the big money is doing. Continue to watch what the central and the commercial banks are doing. What the central banks are doing right now is unprecedented. They have been for many years selling, holding down the price, and now they've done a 180-degree turn, and they are purchasing. Remember, Basel III, tell your listeners to research the Basel III Accord. The reclassification of gold from a Tier 3 asset to a Tier 1 asset is giving tremendous incentive to the world to start selling and shedding dollars and dollar exposure and accumulating gold, which is now on par with the U.S. Treasury market and the U.S. dollar market. It is giving incentive, and more than anything, to me, it is giving a clear indication of where the big money is heading, and the biggest money in the world. Bottom line is, I really, truly do believe that this is the time to enter the market. And if you're looking for a big bang on your money, it's silver. If you're looking for safety, it's gold. And if you're looking for some speculation, it's platinum. In any case, I think the idea is to mitigate your exposure to the dollar and do what the big money is doing and add some precious metals to your account. I think you'll be glad you did.
All right, Andy, thank you so much for joining us today.
Thank you, Priscilla. Hope to see you next year.
Yes. Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Andy Schectman, President of Miles Franklin.